What's up my fam, welcome back to a new video. It's Nasking here again, and into this video I'm gonna flip a $15 deposit into a $200 plus using the boom and crash spike catcher strategy, which I've already set up in this channel in my previous videos, or you can just check the video description to see the setup. Actually, this video was suggested by a subscriber of this YouTube channel who said I should flip a $15 deposit, and let's see how it goes. That's why you're watching this video today. And also in this video I'll be sharing more tips and tricks. So if this is your first video on this channel, you want to slide and check more videos about this boom and crash spike catcher strategy. The strategy is incredible and also very effective, so just stay tuned. I'm gonna also drop just more tricks flipping a smaller deposit. So I'll see you shortly. Alright fam, now on the flip video, when you check in the market for boom, you already bought at the 10 level. You bought at the 10 level just like that, and make sure you've already checked the trend on the higher time frame. Those are the moments in the video where you see me flip from 1 minute to maybe 1 hour, 4 hours time frame. That is when I'm actually checking out the trend in the market to see if it's on the trending market, because the strategy won't be that much effective on the trending market. Okay, so make sure you know the trend, if it's a selling trend or a bullish trend. If it's in one of those trends, make sure you want to stay very short in the market. And if it's not in a trend, maybe it's just ranging or consolidating, then fine, you can implement the strategy freely. So in situations like this, you can see I just bought, no price action needed. You don't need to start plotting analysis, just go in straight with the indicator strategy. Those indicator strategy already help you to do some of the price action analysis that will be needed. That's why synthetic indices is one of the most easiest form of forex trading. Unlike forex trading, actually those ones need more advanced price action knowledge, but this one you can just trade them with basic indicators. So as you can see now, after checking the trend, make sure you are at the zoom zero level. Zoom zero level simply means just zoom out extremely on your chart. Don't pinch in to zoom in, don't zoom in at all. Just make sure you're at the extreme zoom level. As you can see how I'm setting stop loss there. Stop loss, I already made the video about that one. That one is a separate video on its own because it's very important. Where you set your stop loss in a trade, it tells a lot on how you're going to end up closing that position. Are you going to close it in loss, or are you going to close it in profit? Or are you going to close it in loss and be like, oh yeah, I did the right thing? Or are you going to close it in loss and be like, oh, I shouldn't have closed, I closed too early, I end up hitting my stop loss all the time? Stuff like that is what I have solved and made a video about. So as you can see there now, you now have to check trading on a small account, trading boom and crash on a small account. You need to check which is extremely volatile. Volatility indicates that the one which is extremely volatile tends to give you more money, same for your loss, in correspondence to your lot sizes. So higher the lots on a volatile market, is going to give you more money, equivalent to when you are in loss too. So you want to be careful when you are on a small deposit to trade a less volatile market. So on this case, the volatile one here is crash 500 and the boom 500. Okay, and the less volatile one is the crash and boom 1000. So when you are on a small account like me now, you want to pay more attention in looking for opportunities trading the boom and crash 1000 indexes. Okay, because you don't want to be caught up in a situation where you just end up in margin calls too fast, or You also want to make sure when you are trading the boom and crash, maybe that's where you get opportunities to take a trade. You want to make sure that you are using smaller positions, like maybe you just open one position or two. Don't go too far, don't place more than three. Make sure you're opening more positions on boom and crash 1000 indexes, okay, because they are less volatile, which means lesser risk regardless of your lot size. But of course, on a small account, you want to use 0.20 lot size, the lowest. Instead, you can open more positions as your equity grows. So having said all that, it's gonna give us a better experience to know which of the boom and crashes we should open and the reason why we are opening it. And also, when it's going against you, as you can see, there are so many instances in my videos in which I bought at the respected levels, which all of us should buy and sell at, and the market keeps going against me. I had that question a lot. It keeps going against you. It's not gonna spike. There's no spike, nothing. What you're gonna do is just place the stop loss, guys. Don't just think this is magical. You just bounce over there and just buy and sell at those and start expecting spike. Sometimes, most of the time, the spikes are gonna come late, okay? But don't get pissed at yourself if it doesn't come as expected or it hits your stop loss, and when you check again, boom, there is a spike. Don't feel too bad, because you're going to end up much more in profits than those situations where you don't get any spike. So in situations like this where you get a series of spikes, you can just go and secure your profit, despite the fact that you can close at the respected level. You can just go and place stop loss in profit and secure that position for sure, because for sure, even if it hits stop loss, you are already in massive profit. So of course, up next, I'll just show you guys, as usual, testimonials and complaints from students using my strategies, and how we can also get much better creating strategies and for ourselves. And after that, I'll talk more tricks and tips going a small account. So stay tuned. Alright fam, welcome back to the video. If you notice, I've been holding two crash 500 positions for quite some time now, and with respect to the strategy, I'm supposed to already close, but I made a separate video to show you how I'm able to hold positions a bit much longer than as expected. So stay tuned and watch. It's like this when I'll be in the buy position, for instance, and I tend to hold a bit longer, and most of you will be like, oh, isn't it at the 98, 90 where I'm supposed to close? Here's what I do. Normally, I have already advised to pull the stop loss in profit, right? But another thing you can do is, when you see something like this forming a buy consolidation, or you can say ranging market, then a break to more higher highs, what you just need to do, let me draw that out. When you see consolidation like this, you want to place a stop loss right there, just a bit below that consolidation. In any market, you're going to see range of candles up, down, up. Once you see up and down like 3 times, you already know it's forming a consolidation for a breakout over there. So what you're going to do, you're going to place a stop loss just a bit below that consolidation box. Then the market goes up again. Then if it does that again, as you can see, it did that over there. I'm gonna just go ahead and draw my consolidation again. So in situation like this, you're going to put your stop loss a bit below that consolidation box. So if the market retrace and hit that stop loss, then you know for sure it's going to sell down for a while, even on 1 minute time frame. So that's mostly what I do. I don't just close. I tend to do that, and I tend to save a lot of profits using this method of placing a stop loss below, a bit below a consolidation box, because the rule of a consolidation in any price action situation is when you get a breakout from the up or downside, the market is going to keep on going upward or downwards in that direction for a long period of time. So that's what I mostly do in boom and crash on 1 minute time frame. All right, fam, now you've seen it. That is what I do when I tend to hold some positions much longer. Even though with respect to the strategy, I'm supposed to already close that position, I look for a range or a consolidation box. For crash, I tend to put a stop loss a bit above the consolidation box, and for boom, a bit below. So these are basically the things I do. So I do it all logically. I don't physically do all those stuffs on my channel when I'm doing my videos, because I already do it in my mind. And when I see there's a breakout, I just go ahead and I either close automatically, and the breakout is against me, I close automatically, and if it's for me, I leave it and let it get more series of spikes. The advantage there is going to allow you get more series of spikes before another range, in 1 minute time frame. Then you go again, draw your consolidation and place a stop loss a bit below or above, depends on if you're on boom and crash. Boom or crash, I mean. So those are just the things you have to know. You have to check the trend, make sure you're using the zoom 0 level or extreme leveled. Check if you are on the volatile or the less volatile one, in which the less volatile one is the crash and boom 1000, and the extreme volatile one, which you should be careful with, is the boom and crash 500 index. And also make sure all the indicators, all the Chimoku lines, especially the envelopes line, and also the moving averages line, all touching the 10 and 90 level respectively for your buy and sell, especially the envelope line. So when they all touch, then you can go in for your buy or your sell. And the position situation, of course, in which there would be no spike, or the spike would come late, make sure you go set the stop loss, a tight stop loss. Don't hold the market expecting the spike, or because Mr. Obik say at this level we should get a spike, then you're not going to close that position. No, just make sure you enter a buy or sell and wait for a few seconds, and if there is no spike, few minutes I mean, and you go place the stop loss, a tight one. If it hits, look for another opportunity in the market. So that's why we'll wrap up this video. For this one, I would let you guys enjoy the rest of the video to our target mark, and I'll see you guys in the next one. Don't forget to subscribe, share the video to those of your family and friends that needs help with synthetic trading and forex as a whole, and I'll see you all in the next one. Stay safe.